is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
Good afternoon, everyone. Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show. I usually do the 10 o'clock to 11 o'clock show. That's the Tiger Technicians Hour, and my service is the opening call. It's the daily newsletter. It goes out every day, and on Friday afternoons, I have about an hour and a quarter overview on the positions we have and everything else that we're looking at and anticipating. So, and very detailed. It's almost like a webinar. Anyway, let's get back to the market here. We're looking at the Dow down 176 at 45,943. Made an all-time high 3 sessions ago at 46,714. You see these two lines here. It's called the Chapman Wave Inside Track Repellent Zone technique I developed a long time ago. And you can see how the price just kept going there and kept going there. It snuck above it once, and that was on September the 23rd. It closed below it, had a bad day yesterday, and so far it's not a great day today. But you see this 14-period moving average, the black line right here. It's trying to hold on that. I want you to do something. I'm not sure I'll do it now. I'll try to do it in a little while. Most importantly, the 914 is what I believe is a very important component, at least in my Chapman Wave methodology. And as long as the green line is above the 14, let me just move this away. As long as the green line is above the 14, that's really positive. When it goes under, it goes pink, and that's where you have a bit of trouble. You can see right there, pink, trouble. Green, beautiful. So what we're looking at, look at the weekly chart. The weekly chart, here's the Chapman Wave Inside Track Repellent Zone. We've gone into it a number of times on a weekly basis. It basically starts over there, and over there is the beginning of July. So it's been going on for many weeks. And the way I'm looking at it, the 9 is over the 14. Price is still good. It's still walking the 9-period moving average. The MACD, this is the MACD right here. It's very strong. The 200-period moving average is still rising. Stochastics at 92%, over 80% is good. Over 90 is great. And 92% is what you want to see in a bull phase. And on the stochastic, this on-balance volume, the blue line, it's a little bit overbought. And the monthly chart, we don't have to go into that. We've still got a couple of days to go to end the month, but so far, it's all very good. Let's go to the S&P. So we've been long since April. We've still got a long position, 3 times long, the Dow. But most importantly, today, we went short only based on this Chapman Wave peak D. At D, the fourth highest peak, other things can happen. And on this inside track repellent zone. The 9 over the 14 says, you're a little early, maybe chops around for a little while. Sometimes this means that you can hold steady and have spikes to the upside, even a little bit lower, but mostly you're going sideways before all of a sudden that 9 flips pink and it goes down, and then you have a sudden pullback. And that could take, it could take at least another 3-4 sessions, maybe even a week. All right, as it stands right now, that's what we're looking at. If today's low, and the Dow is 45,785. If that's taken out, then I think we go deeper right now instead of bouncing around. S&P, real quickly, the S&P is trading, it's down 36 at 66.02, made an all-time high a few sessions ago at 66.99.52. And you can see the 9s over the 14. Now the MACD, this is different. The MACD is just turned negative. The relative strength, the gray line there, the daily chart is negative. Stochastics at 83% still good, but pulling back, but it's 83 is good. And the on-balance volumes pull back. So this says a close underneath this low of the 17th of September of 655.1 would be very negative and suggest you go lower in this particular phase rather than bouncing. So to fill the gaps that we've just had will be very positive. If that's done tomorrow or Monday, that'll be very good. The QQQ, Index 100, trading right now down 278 at 593.32. This is a slightly different pattern in that the MACD hasn't turned down. It's turned down, but it hasn't crossed negative. The retro strength is a little bit negative. Stochastics just on the cusp. It's 86%. No, I shouldn't say on the cusp. It's really pretty good. And the on-balance volumes pull back, but that 9 is still very strong. So if the at 590, if it starts to close under 584 in the next few sessions, that's going to be a big problem. 507 right now is the resistance to monitor if there's a big bounce. I do want to go to the SMHs. The SMHs trading, they had a sharp pullback early this morning. They went all the way down to 313.60 from the 323.14 high of just 3 sessions ago. Now they're close to the high of 320.63, only down 51. And that tells me, look at that 914. Look at that. That is really strong. Look at the MACD. It's still very strong. Retro strength's pretty good. That gray line, daily chart. And the stochastics at 91% fabulous on balance volume. So all of this says to me it's going to be a process, and that I'm probably a little bit early. We wanted this also as just to have some insurance to all our long positions, having a short position, a small one. We'll see what happens next. I do want to go to gold. Gold right now is up 17 at 37.85. I made a peak that high right there. I didn't type it in because it's a continuous contract and it gets smoothed out. 3824.6. That's the high that was made through all-time high. Peak E right there. But look at that, 9 over the 14. MACD is good. Retro strength is pretty good. Stochastics at 88%. On-balance volume is good. So we're keeping our gold position, what we've got left right now. I don't want to do anything with it. Leg D in the weekly chart. And look at that monthly chart. Look at that resistance. This could become a repellent zone. I'm just going to draw it in right here. While we're doing it, we'll do it. No, I'll do it later on. I don't want to waste time. So this is the repellent zone. We'll see whether or not it can break above it, meaning it goes towards the 38.90 to 38, almost the 39 area, maybe even 4,000. I don't know. Might have a bit of trouble getting there. Look at Bitcoin. Been warning for a while now that we had made that double top at the 125,200 level back on August the 14th. And even though we are long, we have some long position left in the IBIT, the iShares. This is the dreaded H pattern that in the Chapman methodology, I look at 3 core patterns: straight up, straight down, cup formation, arch formation, maybe a mix of the 1 and 2 or 1 and 3. In this case, 1 and 3 says the dreaded H, because if it rallies and then takes out this left side low, it can go quite a bit lower. We'll see what happens. You know, when you there's no guarantee with these things. And look what happened this afternoon. Look at this. This is the E-mini. Look at that double bottom. And my rule of thumb with the H pattern, looks like an H pattern, is if it fails at a peak B and takes out the left side low, it has 2 bars in which to close above the left side low, and then the challenge is to close above the arch high. That's going to be a little difficult to do. It's kind of stalling right now, but isn't that a fascinating pattern? And that's live. I just wanted to show you that these things don't have to wait for history to work. They can happen live. I'll be back in a few minutes. Basil Chapman sitting in for Tommy O'Brien, and at the half hour, we will have Tim Ward. I'm sure you want to hear what he has to say. I'll be back in a moment. The Dow is down 187, S&P is down 35.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi folks, I just want to show you this. This is live right now. This is the E-mini 1-minute chart. You see this orange line here? It's a 200-period exponential moving average. Look how powerful it is. It was resistance, and now for about 40 minutes, it's been a support level. We saw this earlier in the day when I was doing my show, and I mentioned to folks that were listening, am I going too far? Where did it go? Oops, did I just make a mistake? When was? Oh, it was at 10 o'clock, right. So let's go to 9:30. Okay. ESM, why is it go? Oh, there it is. So we looked at this, and we were looking at the chart going sideways. Did I mess up here? I think I did. I think I did. I don't know why it's not there. ES. Oh, there it is. Wrong day. So we're looking at this sideways move. Look at this. I'm scrolling across. I'm sorry. Maybe I'm getting you giddy. Or I can't do it. Something happened. Did I lose the data? What happened here? It doesn't matter. We had a sideways. I saw it. It went by. We had a rectangle formation, and it went sideways within an 8-point span, high and low, in this rectangle. And the rule of thumb is, I wish I could find it because it said exactly what we're going to look at right now. I am going to look for it. Take just a moment. Here we go. Move across to, there it is. A long, narrow rectangle can last a lot longer than your patience. And look at that 8-point rally from just after 10 o'clock all the way through until it broke down at 11:10. That's an hour of a 1-minute chart. There's over 60 bars. And it just stuck. And then the rule of thumb is, if it takes out the low after the long rectangle, there's a good chance that it's going to try to get back in because it happens so quickly. It wants to go back to say, bye, folks. And it goes back, says, bye, folks. And it comes back and then starts a brand new move. And this move took it above, just a little above the rectangle, and then it started all over again. Isn't that interesting? And it repeats over and over. We're going to see it right now. Right at this moment, down 37 at 66.55. If this takes out 66.50, we're at 55 right now, 60, I'd even say 66.52. It could test the 66.50 level and then pop back up, and then we'll see. If after that it comes back down and takes out the low that was just made, that's serious. Otherwise, it just kind of frustrates everybody. Now, I needed to do this. I wanted to talk about it, and I'm going to do it right now. So for my subscribers to the opening call, I've been saying that we've got to remember that major sell-offs never occur without a headline. And that headline starts off with small little print, little tiger, we used to call it, or the font, and then it gets bigger and bigger and bigger. And when it gets very, very big, you're very close to some kind of a pullback. So I developed a thing called the Chapman Wave Dark News Cloud Cover. Got nothing to do with the candle cloud cover. This is the Dark News Cloud. And what it does, if you look at all of this, it used to be, we've got an internal high and then a residual high, like an earthquake, and then an aftershock, which can be just below or just above or right on the previous, the earthquake high or low. And then you start to pull back. And it used to be yields. Yields did this all the time. I don't want to go back to show you, but you can see that back in January of this year. And then it started to change character. It was other things. And we had much smaller pullbacks. Look, that green line, that's the 9-period moving average. Look at that. It held green all the way. It just went in August to the from that August low, August 1st, I think, August 1st low, that went pink just briefly, and then it went back to green, and it's still green. And each one of these were like internal highs and internal residual lows. And we just got that again. But look how mild it is. So I'm going to emphasize that when we finally do get a sell-off of significance, it's going to have to be where the Dow, instead of on a lousy day, it's down 200 or 300 points. It starts off, it's quickly down 450. The S&P is down 58. Tries to rally, it fails. It closes the day at the low of the day. Overnight, it tries to rally, it fails, and overnight it's down sharply. And then the next day it opens down and it tries to rally, it fails, and the volatility index starts to creep up, and it creeps up slowly at first, and then it really picks up steam. And that's kind of what I'm saying. At this particular point, everything is so mild. This is just not historically what we've seen. And even these big spikes, look at this, 19.36 on the VIX index, the beginning of September. What was what did I say, what date it was? The beginning of September is not good enough. The 2nd of September, look at the S&P. On the 2nd of September, right there, 2nd of September. There's just no room for sell-offs. But that will change at some point. But one of the things I'm looking at here is, look at this weekly chart. I drew in the Chapman Wave Inside Track repellent zone, and we haven't broken above that yet. So I'm watching over the next week or two. And I don't want to go into the Chapman Wave. Tomorrow at 10 o'clock, I do a more technical analysis and using Chapman Wave analysis. So if you want to tune in, I think it'll be beneficial if you're interested at all in these different techniques. But so most importantly, what I'm looking at here is the steadiness of a move like this is really important. That steadiness is, I used to call it years ago. I remember Eli Lilly or Merck. I kept looking at, and it was like a little worm crawling up the branch of a tree. There was never a pullback. It just kept a small move to the upside. The only time it pulls back is when there's a final capitulation in that particular sector, and it really takes weeks and weeks to resolve. We haven't got there yet. All right, so that's really important. Now, let me just do this. When I look at certain stocks, they give me clues. So Robinhood is like the layman's. It's a very good clue that the general folks of the public are coming into the market. They've been doing that for a long time. It's down 4.31 today. At 122.48, made an all-time high yesterday of 100 and, oops, I didn't update that. I think it was 129 something or other, 130.07. So 130.07. And as I see it, this is a clue to say it's done extremely well, but it's getting to a point where it might start to stall. It depends on how deep this particular pullback comes right now and how deep how strongly it rallies after that. But it is in a leg D, so these where you've got to be a little bit careful in the weekly chart. So within that context, GE is another one. Look at the spectacular move in GE, going all the way to 307.25 yesterday, down to 296 today, taking out a couple of days worth of upside action. So it's something to watch. And that's just saying to me, start to monitor the real strong stocks. Microsoft is trading right now. Whoops, that was the wrong one. MS. There we go. MSFT. Look at this. Microsoft trading down 3.35. It's kind of struggling here. So I'm just using these as a little bit of like a benchmark to say, if these are not doing all that well, I mean, making all-time highs is one thing, but if they start to fail, that's going to be a clue that we're going to get a deeper correction. We haven't got that yet, but it's just kind of, for me, those three stocks we are still on portfolio in the opening call in my service. But I'm watching them closely. We would like to add on some kind of a deeper pullback. And if you're looking at the GDX, look at this. The GDX just made 75.28 was the all-time high, pulling back just a little bit. But look at the technicals. The price is over the 9. 9 is over the 14. Big, wide distance. To get this to go pink, you'd have to see the GDX trading right now at 73. You'd have to see it at 66, 67, maybe 65. So these things that I'm monitoring, I'm saying, don't be too quick to say it's all over in this particular move. Yes, you get these consolidations, and we have to assess them. So I'll be back with Tim Ward straight after this, and check out my opening call daily newsletter. 215 down 213 right now, and down 39 in the S&P. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. And just before we go to Tim Ward, I just want to say, remember we were looking at the rectangle, and I said, how long can a rectangle last? A lot longer than your patience. Look, it's still in that narrow trading band. Anyway, with that said, I want to go to Tim Ward. Hi, Tim. How are you?
Good. Thanks for having me on again.
Pleasure. Just before we go on, could you just tell everyone how they can reach you at Ord Oracle?
Yeah, my email is tim@ord-oracle.com. My website's www.ord-oracle.com. So that's how to get a hold of me. Got Twitter account. It's @ord-oracle. So that's how. So should we move on to the markets? See what we're doing?
Yes, please. Okay, you'd like to start where?
Yeah, hope we got this up. This is the SPY, and let me get the drawing tool here.
Should be coming up right now. Let's see, we've got it. Let's see, wait a minute. Do we have it? Tiger TV. I've got mine. Wait a minute. I can see it in the Tiger. Yes, we've got everything. Please go ahead.
Okay, so we got it. All right.
Yep.
So I was looking for a pullback. This is the SPY on a daily S&Ps here, and I was looking for a pullback down into the support area between 650 to 640 on the SPY. That's that colored region right here. And today's trend so far is not even panic. Last time I checked, is around 0.7 for the trend. To get in, to have this area 650, 640 to be support, which showed panic in the past. That's the reason why we shaded it in light pink. Past panic areas are support areas, and once you go back into a panic area, the trend should actually show panic again. In other words, reading one above 1.2 or higher, and so that hasn't happened yet. But we're not into that region yet, so that region probably will get there soon. Volume will probably be higher than yesterday. That shows some energy to the downside. But I'm looking for a buy signal in the 640, 650 range. The VIX, which is the next window here, was showing it. Only thing bad about the VIX, it just warns you that you're going into a high. It doesn't really tell you exactly where the high is. And that's the flaw of that indicator. The important part is it does give you a warning that you are going into a high. So this is the VIX. This is the SPX VIX ratio in the top window. As you notice, this ratio is making lower highs as the S&P was making higher highs. And right now, this ratio is still going down, and finally the market did pull back. Now it's going into down. So we haven't reached the panic area yet. It's still below us, but this is probably where the buy signal is going to generate, somewhere between 640, 650. And so that's what I'm looking for. So not a lot of downside here. I thought about just going short, but bigger trends up, and I expect new highs to hit before the year's out, and I'm not sure what October's going to go. It could be a trading range here where we hit 640 range, 650 range, bounce up to the current, the previous highs, up around, looks like about, 666 area, somewhere up in here, then we come back down again. I'm not sure that's going to happen. But either way, I'm looking for a buy signal in this range, and that so far looks like it's probably feasible. This goes back to June, shows the other times, the other highs we had. Back to late July, we had a high, and another in 1st of August, we had a high, and now we got another high. So it's kind of routine. But anyhow, I'm bullish, but we haven't reached the eye areas, the panic area yet. So I'm still neutral on the SPYs, but I'm bullish long term, so I'm looking to get long in this panic area. So we can move on to the gold issues.
Good.
If you want.
Yes, please.
All right. We had wanted to point this out. We're going to jump ahead here a little bit, but on Monday or Tuesday, rather, our last time I was on Tiger Financial News Network, I had a caller come in and ask me why the big spike in volume, and so I looked at a couple of. This is Brock Mining, and this one was AEM. Both of them. This is a weekly time frame. It actually worked on the daily time frame too. But normally when you get these big spikes in volume, where you jump at least 50% compared to the previous highs going into that high, normally their exhaust move to the upside. So what I'm kind of looking for here is an exhaustion. Right after that, normally you go into a consolidation. That's when everybody hits the buy signal. That usually stops the market. That's including going down, including going up. So I'm thinking we're heading into a consolidation in here. How big the consolidation is, I think it's going to chew up more time than price. I don't think it's going to be a huge decline. It's kind of hard to say. This last one here in April of 2025 lasted, a month and a half. Mm-hmm. This one may last a month and a half also. So, I think we're heading into a high. And I got more evidence that high may be happening right now. It doesn't take away from the bull market, but the market does go straight up all the time. But I've tried to look for indicators that are working in the current market. We really exploded above 55 all the way to about 75 in a very short period of time. And a lot of those indicators on a short time frame just didn't actually were giving bearish signs, but the market continued to push higher. This one has actually worked pretty well over history. This chart goes back to for some reason my drawing tool went away here. There it is. This chart goes back to 2012, and the middle chart is the weekly GDX. And the bottom one is the GDX-GLD ratio, which is the RSI is on. So the weekly RSI of the GDX-GLD ratio, and every time it got above 70, where it's almost 80 right now, 79.7, you get a consolidation. So it doesn't give very many signals. You get one about every couple of years, but the ones that do work pretty well. This one actually kind of gave a double signal. Market kind of still pushed higher off that 2016 low, but we never got above.
Those are the vertical bars, right? The gray vertical bars.
Yeah, this bar right here. You can see it. Those are all times when the RSI of the weekly GDX-GLD ratio got above 70. So, I hear the music.
Yep. So, this is fascinating. Looking forward to the follow-up and the next segment, Tim. So we'll be back with Tim Ward in a moment. We're looking at, I've just got the chart of the AEM up there. Let me just get the chart of the S&P, SPX.X. There we go. S&P is pulling back down 41 at 6,596. And then E-mini that we were looking at right here, and if you can see it,
if you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Hi folks, Basil Chapman. This is the Tom O'Brien Show. Tommy's away this afternoon. And we're on with Tim Ord. And Tim, what chart next do you want to go to?
Actually, we'll stay this one for just a bit. But I will also point out the bottom window, again, this is the weekly GDX-GLD ratio. And what I want to point out, we're into the ranges of that ratio where previous highs that formed. That's the reason why I put this blue area here. The RSI, which is the blue lines, dotted lines, and it has that shaded area also, which is where the anything above 0.20, we're at actually 0.211 on the ratio. And previous times it got up that high, the market also consolidated. So you got two things going on. You got an RSI above 70, and you got the GDX-GLD ratio in an area where previous highs have formed in the past. So I'm thinking this is just a consolidation. Most likely we'll pull back down to support. Support, the reason why I put this line in here is basically the 2011 highs, comes in around 60. So we're due for consolidation. RSI on the ratios up there, and it's also in the region. So I'm not bearish. It's just the market's actually still picking up momentum, but it's a needed timeout to the upside. So that's why I want to point out that. Let's flip to this. This is I've been showing this chart for the last couple of shows. This is a momentum chart for the advanced decline, which is the bottom window, and a momentum chart for, actually you can't read it here, but this is the up-down volume for GDX. So you got advanced decline, all the stocks inside the ETF of GDX, and the up-down volume for all the stocks inside GDX. And once you get above 40 on both of them, which we actually had twice happen, once in late August, another in mid-September, that's initiation of an up move. So this rally is just beginning on the bigger time frames. Previous times when that was signaled, the market rallied at least 6 months, and at a minimum of 3 months. So even though we may consolidate, the consolidation may take a week or two or three, the bigger trend still remains up. So will we hit new highs for the years out? I'm thinking probably. I don't know how long the consolidation could last. Could be a very quick one. But I'm actually, GDX, I want to get back in the market, actually get long GDX, got myself out of that position. Should have flipped long, but I didn't. But I think I could possibly get back maybe close to that 60 range on GDX. And so anyhow, that's what I'm kind of looking for. So you got one short term, you're probably going into consolidation GDX. The bigger trend, according to this chart we're watching right now, suggests an initiation of an up move. So you want to buy the consolidation. So that's what I'd be looking to do. On a short term basis here, this is a kind of a longer term view or a shorter term view of this chart. So I kind of blew it up. You can see the initiation of both those signals. You got above
on the
40.
right. On the right of the chart, yes.
Right, where I'm putting the blue part is. So that's both those times. You kind of went a little higher. So sometimes you get a mild consolidation, but I think the worst case scenario is basically 60, which is right here. So maybe some there, then back up again. So this bull market's not over yet. It's just a consolidation up with the big spikes in volume on AEM, Barak Mining, and a bunch of others. McMoran, I think, had a big spike in volume also. Those are normally exhaustion moves to the upside, and that warrants the consolidation is about to start. So is it worth shorting? I wouldn't do it. I think the potential pullback could be kind of choppy. Not every day is going to be a down day like uptrends, impulse waves to the upside. They kind of be, down, up, down, up, down, up. But ultimately, I think close to 60 range is where the road or the tire meets the road in that vicinity. So we'll see how that works out. There's a lot of little stocks starting to perform. But like I've been saying over the last, week or so, I think the big ones are kind of exhaustion move to the upside. They're going to need a consolidation. I think that consolidation for these big ones has started. So it's not the time to buy IEM or Brock or McMoran, or there's a bunch of others there in there too. Wheaton, I think, had another big spike in volume. So all of them kind of did. And again, that's just an exhaustion move. So, anyhow, you got questions or anything, or anybody?
So someone asked about silver. Is there a correlation, or you're lumping them together, or silver you're looking at completely separately?
Silver stocks, you mean?
Yes.
Or what?
Well, silver itself, yeah.
Silver itself should outperform gold. That's what normally happens in bull markets. Silver, I have a silver gold ratio that I kind of pay attention to, and I don't have that chart right in front of me, but I still think it's in the buy area. What that implies is that ratio is still in a buy area. That, in other words, silver has not outperformed gold yet. What that says at some point silver will outperform gold. That's what normally happens in bull markets, and that hadn't happened yet. That implies silver stocks are still cheaper than gold stocks. So, my opinion, silver stocks right now, if you're doing by valuation, is a place to be. I said in the past on our show that DBS, which is basically a silver stock, still close to its buy area. It's already broke out, started its uptrend, but I think it's got a target anywhere from 8 to 12, which is basically a double from here, if not a triple. Then there's
even higher than the 2014 high at 6. Yeah, wow.
Yeah, that's what the targets are. So we'll see how they work out. I'm not a magician as far as future price goes, but I know how momentum works, and that has a lot of, if you look at the volume charts, even on a monthly time frame on DBS, they're just huge. They're 5-6 times what it was even a year or even a couple of years ago. So there's a lot of interest going in that.
Yeah, the on-balance volume has just screamed to the upside. It's at a high right now. Yeah.
Right. And the stocks, per se, it's moved up, but it hasn't moved up like, Barak Mining or some of those yet. I think that's still to come. So we'll see how that kind of works out. But I think these smaller ones will actually still keep moving forward because they haven't reached their RSI extremes yet to the upside where a lot of the big ones have. And also you had big spikes in the volumes on the big ones where the little ones haven't done that yet. So probably kind of a quiet period for them, maybe a next month on these gold issues, but bigger trend is definitely up. We're not, it's just, we'll get a shot close to 60. I'll be probably most likely be along GDX. So it's bullish. Equity market looks good. Actually, gold market's going to go along with it. So both markets probably will perform pretty well going into year end and possibly even next year looks pretty good. So we'll see how that works out.
That's great. Thank you so much, Tim. Tim Ord, folks, Tuesdays and Thursday afternoon, interviewed here. Check him out, Ord Oracle, and I really appreciate that. Have a wonderful weekend, and we will see you on Tuesday. Thank you.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Isn't that amazing? Look, for over an hour on a minute chart, we've gone in an 8-point trading range, and I typed this in earlier when there was an earlier narrow rectangle before. And what I said before, when I was talking about a long narrow channel rectangle, I should have said, rectangle can last a lot longer than your patience. So I should have said a rectangle, but I said channel. I meant, well, it's a channel, but it's a rectangle. Can last a lot longer than your patience. Yeah, we are. We'll see what happens over the next couple of minutes. Now, most importantly, I'm just going to emphasize again, rather than mention some of the great stocks that have moved up so sharply and are now having a little bit of a consolidation. I mentioned IREN as one that we've had some from 22 and a spike to 49.30 in a very short period of time. But that's the best of the best in the sector that's making money. When you get this, the data centers, renewable energy, GPUs, etc. Some of the others, I think, are going to have a little trouble here. So you've got to go for at this particular phase in these stocks that are running so sharply. You have to try to pick the best of the best. So what I'm going to say is, in this phase, if there is a sell-off, the sell-off has to have bad news, bad economic news, that's something that affects the market, impacts the market. And until you get that, you get these sudden sell-offs, and then it comes right back again, tries to make a new high. But to really get momentum to the downside, you have to have a story, a bad story, a negative story, a story the market says, oh my God. And then you don't want to see the VIX just immediately shoot up into the 20s. It's got to stall. It's got to try to struggle. It's got to have, there's a 16. You want to see it take its time before it gets into the 20s. And then the market can start to accelerate if day after day you get the selling pressure. We haven't had that. So at this particular point, there's a bias to the upside. And I do believe we start to see a little bit of weakening, but we haven't got there yet. Have a wonderful evening. Stay tuned. Tomorrow, Tommy will be back at 9, the morning market kickoff. Great show. He puts the technicals and the fundamentals together. And have a wonderful evening. Basil Chapman signing off. Check out my opening call and check out my daily show at 10 o'clock, the Tiger Technicians Hour.